Hello, thank you for joining us at our very first Money Monday webinar. This is a series of 5 financial webinars that the Lake Park Public Library will host and are being presented by Money Management International, a nonprofit that provides consumers with free credit counseling and education. Tonight's speaker is Tara Alderete, and she will be talking about understanding the United States financial system, including institutions and products, banking requirements, credit and debit, money management strategies, and common savings vehicles. Future webinars will be on April 26th, Managing Income and Expenses, May 3rd, Credit Reports and Credit Scores, May 10th, When Income Decreases but the Bills Don't, and May 17th, Avoiding Scams and Identity Theft. If you miss one, all of these webinars will be available for viewing at the library's YouTube channel, which can be found by searching for Lake Park Public Library. And right now, I will turn it over to Tara, and she can explain to you about the United States financial system.
All right, thank you, Judy, so much. Hello, everyone. My name is Tara Alderete. I'm the Director of Enterprise Learning here at Money Management International. We'll talk a little bit about Money Management International, or MMI, and what we do and how we might be able to help you out with your financial goals and situation in just a moment. But I just wanted to tell you that I'm really excited to be here with you and talk about the United States financial system. I think that we have such a great, robust system with really fabulous tools and resources. And it can seem a little bit complex and overwhelming, but once you understand all those tools and resources that are available, you really start to be able to participate fully in the system and utilize those tools to help you achieve your financial goals. So I think this is the perfect place to start this financial wellness series, and I'm excited. Beatrice Mauersberg is also with us. She's our bilingual financial education manager. She's wonderful. I'm going to let her say hello quickly because she'll be doing some of the sessions in this series as well.
Hello, everyone, and thank you, Tara, for inviting me to tonight's presentation, and I look forward to be here in the next couple of weeks.
Awesome. Okay, so let me go ahead and share my screen, and then we'll get started. Okay, so I first wanted to just take a moment and talk a little bit about MMI, who we are, and the services that we provide. So we are a national nonprofit credit counseling and housing organization. We have been providing financial wellness services through counseling education for over 50 years. Many of the services that we provide are free or very low cost because we are a nonprofit. And so I just wanted to quickly talk a little bit about the most, sort of the base and sort of, I think, the most important services that we provide. The first is a credit counseling session. And this is a great place to start, particularly if, as we're moving through this series and these sessions, you start to think, well, this is really good information, but I'd like to sit down with somebody one-on-one and talk about my own personal financial situation and budget. And so that's where we start with a credit counseling session. It is absolutely free. It takes about an hour. You'll work with a counselor online or over the phone or in person when and where it's available to identify your financial goals, build a workable budget that works within your lifestyle and your income and expenses, talk about resources that are available to help you achieve those goals, and then build a plan going forward. At the end of the session, they'll send you a copy of the budget you created together as well as your goal achievement plan, and then all you have to do is live it. So the hard part is done, and then you just take it from there. Other sessions that we have from that, when we talk about your initial goals and where you'd like to be, then we might take advantage of other services that we offer. One popular one is a debt management plan. And this is where we would work with your creditors to lower your interest rates, stop fees, and get you paid out of debt in 3 to 5 years. This is also a really good thing for folks if you have a little bit of overwhelming debt and it's stopping you from achieving your financial goals. This is a great place to go. We also provide a full service credit report reviews, student loan counseling, bankruptcy counseling, housing education and counseling, so pre-purchase classes if you want to buy a home, learning more about reverse mortgages, all that good stuff is available through MMI. So you can visit us online at moneymanagement.org, or you can give us a call and we can get started with scheduling a counseling session today. So just a little bit about who we are and what we do before we jump in. So let's start to talk about all these components of the U.S. financial system and how we can use them to help you achieve your goals. So in this session, we're going to cover basic components of the U.S. financial systems. We're also going to talk about scams, some common scams and fraud and predatory lending practices so that you can be aware of them, and then just identify key steps to take to help safeguard your personal information. We'll also talk about resources to help you manage your money and achieve your goals going forward. And so what accompanies this session is a handout with all the different resources and key points that we'll talk about. So you can absolutely take notes, but you don't have to worry about making sure you record everything. We have it available for you in a handout that accompanies this session. So I'm excited. Let's jump right in. Like I said earlier, the U.S. financial system can seem a little bit complex, but really, once you understand those basic components and how it works, you start to get comfortable so that you can fully participate in that financial system and utilize the tools and resources that are out there to help you achieve your goals. So that's what we're going to talk about tonight. But I'd like you to think for just a moment about what those financial goals are. Because when we talk about financial wellness or understanding tools and resources that are available, I think the best place to start is to think about, well, where do I want to be in 1 year, 5 years, 10 or 20 years? Most goals that we have a financial component. And so in order to achieve those goals, we have to have a good handle on our financial plan and the tools and resources that are available to help us get there. And so I just always kind of like to open the session by thinking about, well, where do I want to be and what do I need to help move me to that place? So let's start by taking a closer look at some of the basic components of the United States financial system. We're going to talk about financial institutions and products that they offer. So this would be like banks and credit unions. We're going to talk a little bit about credit and debt, credit reports and scores, and your credit history, why that's important. We'll also talk about insurance, taxes, and then some of the tools and strategies to help you build and maintain a successful financial plan. Now, I will say we have about 45 minutes together in this session, 45 to 60 minutes, depending on questions. And so this is a broad topic. And so our intention here is to touch on all of these basic components of the U.S. financial system and give you some tools and resources to then go out there and do some research and find the products and services that are right for you. But I'd like you to keep in mind that if you want to learn more about any of the topics that we talk about tonight, you can visit our website. I'll share some additional resources with you, and I'll let you know where to go to learn more about those topics that we talk about. So this is a high-level approach because there's so much information. So let's get started. Okay, so first we talk a little bit about financial institutions and products, and this is probably, one of the cornerstones or a big piece of the U.S. financial system. And these are banks and credit unions that allow you to take advantage of products and services, but probably most importantly, these are a safe and secure place to store your money. If you're keeping your money in your house, then it's not safe. It's available for anybody who breaks in to take your money or what have you. But if you store your money in a bank or a credit union that is insured by the federal government, we'll talk about that in just a moment, you can be secure and safe in the knowledge that your money is protected. And not only is it protected and safe, but you can take advantage of tools and resources to help your money grow through interest and different loan products. And you can also take advantage of tools and resources to help manage your money. So you might have 3 or 4 different accounts with one financial institution, and you become a trusted customer of theirs. And then when you start to think about, I think I want to take a loan for maybe purchasing a car, or I might be ready to buy my first home, you've already got a trusted partner in the financial service industry because you've established a relationship with them, and they might have products available for you, or could point you in the right direction. So many banks and credit unions in the U.S. are insured by the federal government. You want to look for one that's FDIC insured, and this is Federal Deposit Insurance Corporation. And basically what this means is even if that bank or financial institution goes under, goes out of business, anything happens, your money is safe and insured by the federal government. So that's the first thing you want to look for. Common products that are included, in some financial institutions would be checking accounts. And this is where you have an account, maybe it earns a little bit of interest, but the basic idea of this account is not to earn interest and grow your money that way, but it's a place to be able to manage your everyday expenses. So maybe your paycheck is automatically deposited into your checking account, and you can either write a check or take out money using a debit card or at an ATM to pay your bills and meet your needs. So this is sort of an everyday spending approach, right? And then there are different savings accounts and products. And so typically with savings accounts, you might be accessing that money less frequently, because the idea here is that maybe I have a savings account where I'm saving for emergencies. And so I would only touch that if I needed to use it for an emergency. And so you might earn a little bit more interest with a savings account, depending on the type of account that you have. And then there are different loan products that are offered by banks and credit unions. And these might be products to help you build credit. Could be loans to help you, get an education, buy a car, buy a home, just a personal loan, do some work around your house, different things like that. So these are basic services that financial institutions provide. Your financial institution might also provide you with some education and resources. So they might do classes and webinars and, different learning sessions from time to time as well. So they're a trusted resource. One thing that I wanted to point out, and we'll talk more about this in the resource section, is that there's a great website. It's called bankrate.com, BANKRATE. And I love this website because you can actually go out there and compare different banks and credit unions, compare different accounts and products. How much interest will I earn? Is this the best deal for me? What's the minimum deposit required? All those different things, so you can make an educated decision on what best fits your lifestyle. So I wanted to point that out. Okay, so let's talk a little bit now about credit and credit history. Credit allows you to borrow money or buy something now and pay it back over time. And so credit is very common in the United States. Transactions that you make using credit are reported to credit reporting agencies. And those credit reporting agencies compile a report, and that is known as your credit history. And that report contains information about all the transactions you use or you make using credit. So there are 3 main credit reporting agencies in the United States, and those are Equifax, Experian, and TransUnion. And so these are the organizations that compile those reports. Your credit report and your credit history is very important because it is used to determine whether or not you'll be approved for loans. If you are approved for loans, how much interest you'll pay on those loans. It can also determine whether or not you have a deposit for certain services. They'll look at your credit when renting an apartment. You might even need credit if you want to stay in a hotel or rent a car. Potential employers might also look at your credit history and report. So it's very important that you establish and maintain a positive credit history in the United States, because it really is, if it's managed right, it really is a tool that can help you build wealth and achieve your financial goals. So let's talk a little bit more about credit reports and scores. So the information that is shared with these credit reporting agencies is information like how much money you've borrowed from different lenders, whether or not you've made payments on time or you've missed any payments, whether you've paid the accounts off, things like that. So it's also going to contain information, personal information. So a name and address, previous employer, things like that. So it identifies you and it shows all the different transaction history that you have around credit. Another thing that's important about credit history and your credit reports is that as a consumer, you are responsible for looking at your credit report on a regular basis to say, gosh, everything looks great, or whoa, there's some stuff on here that doesn't look right to me, and I need to start the process to dispute that. So as a consumer, it's our responsibility. And I will talk to you toward the end of the session about how to get a free copy of your credit report so that you can see what's on there and what it says about you. So the information that's contained in your credit report is used to generate a credit score. There are different credit scoring models, but the most common one is the FICO score. And this is put out by Fair Isaac Corporation. It's FICO. And the FICO score, typical credit score, ranges from 300 to 850. The higher your credit score, the better. So again, when you apply for different services and loans, if you have an 850 credit score, chances are you're going to be approved for anything you apply for, and you are going to get the best interest rate possible. In many cases, no interest. And so the difference between a good credit score, a medium credit score, and a low credit score can really determine how much money comes out of your pocket on a regular monthly basis for things like homes and cars and everyday expenses, college tuition, things like that. So it's important. And again, it can also determine whether or not you're offered a job. So to request a free copy of your credit report, you can visit annualcreditreport.com. If you don't have credit established, there may not be any information or much information out there on your credit report. And so to establish credit, you would talk to your financial institution. Do you have any credit building products, right? Or you might get a cosigner to apply for a loan with you to help you build that credit. And so once you build your credit, you want to make sure that you're maintaining it and keeping an eye on what it says about you regularly so that you can address any discrepancies. Credit is a huge topic and one that we'll cover in detail and at length later in this series, but it's another big piece and cornerstone of the U.S. financial system. So that leads us to talk about debt, right? So we can't talk about credit without talking about debt. So debt is essentially money that's owed that has to be paid back. So if I borrow something or if I buy something using credit, then I have debt. And then interest is the fee that I'm charged for the privilege of borrowing that money. And again, how much interest I pay is determined by how high my credit score is. I think oftentimes when we hear the word debt, we think that it's a bad thing. But if we manage it responsibly, it doesn't have to be. It can be a really helpful tool in helping us get what we want. So here's an example. Let's say that you want to buy a car. You want to finance a new car because the cost of a new car is, let's say, $20,000, $25,000. And you don't have that amount of money in your pocket right now, but you need a car to get back and forth from work. Oftentimes, you'll hear advertisements for, car companies that say, we're running a special, we're running an advertisement, and you can finance a brand new car at 0% interest and zero money down, which means that you can borrow all the money you need to buy that $25,000 car today, and you can pay it back over maybe 4 or 5 years with no additional fees. If you have an excellent credit score, you can take advantage of that offer. And so you might have debt, but you're not paying any interest whatsoever. That debt isn't costing you any money at all. And it's helping you achieve your financial goals. So that's, like the best example of having really strong debt or really strong credit and what that could get you. So that's just kind of one example of how debt doesn't necessarily have to be a bad thing. We just want to make sure that we manage it effectively. There is such a thing, though, as having too much debt. So it's important to make sure that you have a strong financial plan and budget and you understand fully how much debt you can afford to take on. Because if you borrow more than you can afford to pay back, you're going to end up paying a lot of money in interest and maybe paying more for that item than what it's actually worth. Or in the worst case scenario, you don't have enough money to pay back all your debts. And so that can lead to a process of collections and even legal action. And so it's important to, again, manage your budget, manage your credit, and manage your debt. Last thing I want to say about debt is that it can be secured or unsecured. So basically what this means is secured debt is secured or insured by an asset, a thing. So if I borrow money to buy a house, and so I have a mortgage, that would be secured debt, because what that means is if I don't make those payments, they can come take my house away. That's the collateral, right? And then there's unsecured debt, and a credit card is a common form of unsecured debt. We might use a credit card to just buy whatever. There's no restriction on what we can buy with a credit card. And if we don't make those payments, the chances that the merchant is going to come back and take, you know, the meal that I bought at, or the coffee, let's say, that I bought at Starbucks, is they can't take that back. I've already consumed it. So that's unsecured debt. And so again, that could lead to legal action, garnishments, things like that, to help that loan servicer get their money back if those payments aren't made. And so that's sort of the difference between secured and unsecured debt. All right, so like I said, credit and debt, very sort of robust topic that we'll cover more in depth in the next session. But now you've got a better working understanding of it, I hope. Okay, so a couple last things that I wanted to talk about as far as the components of the financial system. And the next is insurance. So insurance is extremely important to any financial plan, because insurance helps protect you and your money if something happens that's out of your control. So whether it's a natural disaster, a car accident, you know, somebody stealing something from you, anything like that, if you're covered, your insurance can help you pay for the cost of handling that emergency. There's different types of insurance, and some insurance is required, it's mandatory, and then some insurance is optional. So for example, if I borrow money to buy a house, and so I'm holding a mortgage loan, I'm going to be required to have property insurance on that property, so that if a tree falls and I can't afford to pay for it, the bank doesn't lose all that money, my insurance will cover it. An optional type of insurance might be life insurance. And so this is if I can pay a certain amount of money each month, which would be my insurance premium, and if I pass away, my money might go to my family to help with my, you know, funeral expenses. That is not a mandatory type of insurance. And so that's, you know, there's different types of insurance. Some we have to have, some we don't. I did want to talk a little bit about premiums and deductibles and how that works, because it can be a little bit of a complex topic. So essentially, you will pay a certain amount of money, typically every month, to an insurance provider. And by the way, you can shop around and find the best insurance provider for you. Again, Bankrate is a good place to compare, so you want to make sure you compare. So you pay a certain amount of money regularly to your insurance provider, and that amount of money is known as an insurance premium. And for that premium, you receive an insurance policy, and your insurance policy will cover a certain amount of money on whatever item is insured. So let's say it's my property insurance. My insurance policy might cover, you know, $500,000 of damage that could happen to my property. But then you'll have what's known as a deductible. And so the deductible would be the amount of money you have to pay out of pocket if a covered event occurs. So let's say that I have insurance. You know, it's property insurance for $500,000. My premium is $100 a month, and my deductible is $1,000. So I would pay $100 a month to my insurance provider I have a policy that says if something happens to my house and the damage costs up to $100,000, all I have to pay is $1,000. So let's say that, you know, I am involved in a natural disaster and I sustain extreme damage to my home and my property and different things like that. And the cost to fix all of that is $300,000. I don't have $300,000 to fix that today, right? All I would have to pay is $1,000, and my insurance company would pay the rest. So that's what insurance helps. That's how insurance can help protect our assets, the things that we own. So some common types of insurance include property and renter's insurance, whether you have a mortgage or an apartment, automobile insurance for your vehicle, health and disability insurance. So this would be medical insurance and health insurance for, you know, your body, your eyes, your teeth. Oftentimes this is provided through an employer. Disability insurance would help provide income if for some reason I can't work, something happens and I'm not able to work. Life insurance would provide money to my family members upon my death. And then liability insurance can help cover the things that I own. So maybe jewelry or different other types of assets. So again, just sort of a quick overview of insurance and why it's important and the different types of insurance and, you know, what's mandatory and what's not. Before we talk about some financial management tools, I just wanted to also talk about taxes. So taxes, right? It's probably the thing about the financial system that people least like to discuss. So in the United States, citizens are required to pay mandatory income tax. And that is money that we pay to the US government, depending on how much income we make. And this income tax goes to pay for a variety of public programs and services. We have a progressive tax system in the United States, which means that the amount of income tax we pay is determined by how much money we make. And so there's a few different types of income tax that you'll see. And typically, this is the money that comes out of your paycheck automatically. So you say, gosh, I make, you know, $10 an hour. I worked 40 hours. I should get $400. How come I'm only getting $310, right? Because our income tax is already taken out. So you might see this on your paycheck stub looking like federal insurance contribution. So this is FICA, you know, FICA tax, and this pays for Social Security and Medicare. And so this provides assistance for older Americans or folks that can't work because of a disability. There is federal income tax that we're required to pay, and that goes to pay for government public programs like the military. And then depending on the state where you live, you may or may not have state and local taxes. Some states don't have state income tax, and each state that does, their income tax rates might vary. But these pay for public service programs locally where you live. And so the other quick word about taxes is depending on your income, you'll likely have to file a tax return with the US government each year. And so the easiest way I think about why we have to file a tax return is to kind of true up on the taxes that we've paid. So like, did we pay too much or did we pay too little? And that's how we kind of get even with the federal government at the end of each year. All right, so let's talk a little bit about financial management tools because, wow, I have said a lot about the basic components of the financial system, and you're probably like, whoa, how do I keep track of all this stuff? So there are some really good financial management tools that help you set goals and achieve them and successfully manage your money for an overall financial wellness plan that works. The first is a priority spending plan or budget. So this is essentially where you're just going to identify your income and your expenses, and you're going to make the plan to run your household and your life every month. There are other tools though, like retirement savings plans, and these might be things like a 401k or a 401(k) or a 403b that is an employer-sponsored plan to help you save for retirement. These plans, or individual retirement plans, IRAs, these plans allow you to contribute part of your income before taxes are taken out to save toward the cost of your retirement. You earn interest on this money as well. And the earlier you can start contributing to retirement savings plans, education savings plans, things like this, the better you'll be, because you earn interest and that interest earns interest on itself. So that's known as compounding interest. And so it really lends itself to the time value of money. The earlier you can start saving, the better. So again, another tool and strategy to help you achieve your financial goals, because it can help you save your money tenfold with, employer-sponsored matches, as well as compounding interest. Education savings plans, probably the most popular one out there is a 529 college savings account. So each state offers a 529 plan to help you save pre-tax dollars for the cost of education. There are different investment accounts as well, stocks, money market accounts. Some folks invest in property and real estate. So different strategies. Once you've built an emergency savings fund to handle anything that might go wrong, you have adequate insurance protection, you have a strong budget, and you're working to achieve your financial goals, you're saving for retirement and education, and you say, hey, I want to start to really invest my money. I have a little bit extra, and I want to see how quickly I can make it work for me and build. And so this is where you might start to take advantage of things like stocks and mutual funds and things like that. And then the last financial management tool that I wanted to talk about is just a net worth statement, because as you start to participate in the U.S. financial system and really build your budget and achieve your goals, a lot of times from day to day, we can lose track of that big financial picture. And so a net worth statement, gosh, I'm a little tongue-tied. It can help us keep track of exactly where we are. And the easiest way I think about this is it's what you own versus what you owe. So a net worth statement will allow you to list out all the tangible assets that you have and then how much money you might owe for those things. For example, if I have a home that's worth $500,000, but I owe $250,000 on my mortgage, my asset there is only $250,000. So a net worth statement will kind of help you true up, again, personally with your overall financial picture. The goal is that your net worth increases over time. And so this is a good way for you to just kind of keep track of that. By the way, there is a sample budget template and a net worth statement worksheet that's also included in the tools section for this workshop. And when we talk about building a budget, again, this is a topic that we'll talk about later in the series and all the different things included in building a budget. So before we start to take a look at the resources, just review the resources that we talked about earlier, I wanted to touch on financial scams and fraud and predatory lending, because we've just spent a good amount of time talking about the basic components of the U.S. financial system, and it's wonderful. There are so many great tools and resources available to help us succeed. With those tools and resources, unfortunately, comes dishonest individuals who try to take advantage of folks that are participating in all the great things that are available to them. So some things to look out for. Scams and fraud occur when somebody that's dishonest tries to take advantage of you. Something like identity theft might occur when somebody tries to use your personal information to commit fraud. And so there's some common scams and fraud. You might be on the lookout for sales scams where people are trying to sell you something that isn't really what they're saying it is. Employment scams where people are trying to offer you opportunities to make money, but it's not really on the up and up. Pretty common are online phone and email scams. We see this a lot. Typically, if it's an online phone or email scam, either somebody is looking for you to share your personal information with them or financial information, or they're trying to get you to click on a link that's going to compromise the security of your technology. So like your computer, your phone, or whatever, and give them access to your personal financial information. So that's becoming, as you can imagine, increasingly common with the use of technology. And then, like I said, identity theft happens when somebody tries to take your information to commit fraud. And then predatory lending is same vein, but a little bit different. So predatory lending can happen when there is a lender or a service provider who tries to take advantage of consumers that are a little bit less experienced by offering them products and services for a lot more money than they should cost. So they're trying to make more money than they should make on these consumers, hoping on the fact that maybe they just haven't paid attention and they don't know what the typical whatever interest rate or what have you is. And so a lot of times predatory lenders will use really, really pushy sales tactics, really confusing language. They're not clear about their message. So, you know, that's sort of the difference between predatory lending and scams and fraud. But none of it is good, and you want to make sure you take steps to avoid all of it. So here are some key things that you can do to help safeguard your personal finances and information. So the first is, whenever you're looking for a financial institution or service provider or product, do your research, right? Utilize sources like bankrate.com and all of the ones that I'm going to show you in just a moment. Talk to people that you trust, friends, family members, your trusted financial institution. If you are new to the country, visit your consulate. You know, talk to people that you trust and get recommendations, and then do your research. This way, you can help avoid predatory lenders, but you can also make sure that you're getting the service that works the best with your situation. The next thing would be to review your credit reports on a regular basis, at least one time a year from each of those three main credit reporting agencies. And again, you can do this for free at annualcreditreport.com. Unfortunately, mistakes happen, things get reported wrong, information creeps up on there. Even if it's an honest mistake, it's still our responsibility as consumers to identify that. The next thing is, review your statements, your bank statements and your service statements immediately, and look for fees that you were charged that were an accident, or maybe unauthorized charges, so you can handle that. Any information you have that's, you know, personal papers, receipts, junk mail, things like that, you want to properly dispose of it. So shred it. Don't just throw that in your trash can. You'd be surprised about what we call dumpster divers, people that will jump into a trash can and literally go through your personal information to commit fraud. You can get on a list to opt out of pre-screened credit card offers to minimize your risk that way. And then finally, just take precautions to safeguard your personal information. Use passwords that are hard to figure out. Change them regularly. You know, don't write your PIN number on the back of your debit card. Be really diligent about not clicking on links or opening mail from unknown sources. Don't ever provide your personal or financial information to anybody unless you are absolutely sure of who you're talking to. And it's okay to say, you know, thank you for calling me, bank. I'd like to call you back and verify that I'm talking to the right person, right? Just be safe about your personal information. And make sure when you're browsing online, you're using a secure website. So just, again, some tips and tricks to help you safeguard your financial information. So let's take a quick moment to sort of recap the importance of ongoing financial education and some of the resources that we talked about today to help you. I don't think that I can stress enough how critical awareness and education is to being able to participate fully in the United States financial system and take advantage of all the tools and resources that are available to help you succeed. So the other thing about financial wellness is that it's an ongoing journey. I always think about this like a journey, not a destination. We should be increasing our financial wellness and our consumer level of savviness throughout our lifetime. Making sure that we do this can help us use those tools to work for us, get the things we want, right? It can also help us, though, identify safe, secure, affordable housing for our family, our kids. Utilize tools and resources to help us save and protect our money. Help us save for emergencies, accumulate wealth, build generational wealth to pass down to our kids. So participating fully in the United States financial system can help us achieve all of these different goals and then some. But it's important that we make sure that we're up to date with the information and resources that are available, and we stay educated consumers. So here's a quick recap of some of the resources that I shared during this session. And again, these are all also listed on the handout that accompanies this session. But to recap, if you're looking for more information or to research and compare different financial products and services, check out bankrate.com. To request a free copy of your credit report, visit annualcreditreport.com. If you'd like to learn more or contact the credit reporting agencies separately, that's not on this slide, but you can do that just on their website. So it's Equifax.com, Experian.com, or TransUnion.com. If you want to learn more about taxes in the United States, this is a huge topic to learn more about. Not only education, but tools and resources as well can be found on the Internal Revenue Service website. And by the way, any website that ends with .gov is a government-sponsored website and program. So IRS.gov is your source for all information about taxes in the United States. You can also visit the government pages, the government website where you live for your state and your city and town to learn more about taxes there and requirements. FTC, which is the Federal Trade Commission, it has some fantastic information and tips on how to prevent fraud and scams, but also how to report fraud if you become a victim. Consumerfinance.gov, what a wealth of information and a great resource here. So this is the Consumer Financial Protection Bureau, and this is an official government, not organization, but a government department that their whole mission, they're just dedicated to helping consumers avoid problems and effectively manage their money. So it's wonderful. If you visit their site at consumerfinance.gov, you can search for information and resources that are updated regularly on any consumer financial education topic you can think of. So great place for resources and information. And then finally, and I'm a little biased, but I would say probably high on the list of importance, is please visit us at moneymanagement.org, because again, as a nonprofit organization, we are a service provider that's vetted and trusted. We're NFCC approved, and we can work with you to build a budget that works, get out of debt, achieve those financial goals through our counseling sessions. But then also through our educational programs, we can just provide the information that you need to make the best decision for you. So please visit us at moneymanagement.org. And then the last thing that I wanted to let you know about, you can link to this from our site, but we also offer an online education platform that is absolutely free. It's called MMI University. So you can visit that site at learn.mmiuniversity.org, and you can sign up for e-learning classes and articles and tools and all kinds of great stuff. So you've covered so much. We've talked about the basic components of the U.S. financial system, how to be aware of some common scams and predatory lending practices, and just key steps to take to safeguard and protect your personal and financial information. We've talked about resources and tools and strategies to help you manage your money and achieve your goals going forward, and the importance of, being an educated consumer as you participate in the U.S. financial system. I share this quick disclaimer with you, and then open the floor for questions or comments. And as I do that, I always like to sort of end by sharing our contact information screen. because I know that these sessions can be a lot to take in. It's a lot of information in a short period of time. But my hope is that you heard something that was helpful in this session and that you'll reach out to one of the resources that we shared to get more information on a topic that you might be interested in. I would thank you so much for your time and your attendance and wish you the best of luck on your financial journey. I hope that I see you again in another session for this series.